you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Aloha, everyone. This is Harold Green of Bright Tree Financial Group, and it is time to stop doing what you hate. I hope you folks are having a fantastic day today. I had a pretty good weekend. It was a Martin Luther King Day yesterday. But normally for me, I usually work on Martin Luther King Day. I don't really take that day off. I was doing research and just kind of thinking about the successes that I've had as an American, but then also as an African American, thinking about some of the successes that my friends have had as Americans, but not only as Americans, but African Americans. And, a lot of us have come a long way. And thanks to Dr. King for his fight for civil rights. And, if you're out there and you're listening to this, it really doesn't matter whether you're black or white. You probably heard those lyrics before, but the fight continues, and not the fight, as an American or African American or Caucasian or whatever. The fight continues as a human being, and I think a lot of people have forgotten that every day you wake up. If you're a man, you put your pants on one leg at a time, and unless you are sitting on the bed, and then you just put both legs in and you go for it. But we're all fighting for something, and. In my last show, I was talking to you guys about me coming back and all the things that I've gone through over the last year or so, just to kind of get ready to start doing these shows again. But it's pretty interesting, the kind of year that we've had. And I promised you guys in the next show that, we would do a market update. And so today is going to be the market update for you. And we're just going to kind of get into it and just kind of talk about what had happened in 2022 but that's not the title of the show. But there is no title because we're just going to be doing a market update today. So are you ready? Are you ready? Are you ready? 1, 2, 3, let's get it. So what had happened was, and I say that phrase because sometimes when I call my mom and something's not going right and something went down. So I said, Mom, what's up? She said, well, what had happened was, and that's just a phrase that, every time I hear her say it, it just kind of cracks me up. And I've seen it used in memes and different things like that. But seriously, last year, 2022 was like no laughing matter at all. Like we had some horrible things going on in the stock market. We had people, losing trillions of dollars in their IRAs and their 401ks. And to me, a lot of that was really, 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 really unnecessary. And every time you heard the feds come out and say, we're going to keep rates elevated for a very long time because we still feel like there's a long ways to go. There's a lot we need to do for inflation to get it down to our target rate of 2% and on and on and on. And every time the stock market would try to go up a little bit, they would come out in one of their meetings or they would come out during the week and they would say something incredibly harmful to the market. And the problem is we had a lot of algorithm selling, a lot of technical selling. And if you guys don't know what algorithm selling means, you can go look it up. It's called algo selling, algo buying, algorithms. There's these quant models and these really super smart people that build these computer programs that basically tell software what information to pick up on and when it's making its decisions to trade or sell or making its decisions to buy. And a lot of it you will see is news-based, information-based. The Fed comes out and they say something that causes a stir. So the computers go into a frenzy. Either they buy and they sell first, and then the next thing you know, humans see that, and then they pick up on that, and then it causes technical issues in, say, a pattern or in a stock's chart. And then from there, if it's to the downside, then basically what you're going to see is you're going to see a mad bum rush to the downside of people trying to get out of a particular stock. And so, there's two ways you can kind of play that. If you are a long-term investor with a 5 to 10 year horizon, you can buy in on the dips and just kind of buy those stocks as they go down, or you can be like everybody else and sell. And so what I want to look at today is I want to look at a particular stock that everybody's heard about that's been in the news, left and right. And that stock is Tesla. So that company went from being the favorite in the world to being like the most hated in the matter of like weeks and months. And it had nothing to do with the underlying fundamentals of the company itself. They were still printing money left and right. Tesla is like, it has a license to print money. The fundamentals are strong. Cash flow is strong. Balance sheets are strong. Revenues are strong. When you look at those charts, that information goes straight up to the right. Like it just goes off the charts to the right. But when you look at the other charts, which shows the stock price constantly going down on this bad news, it was entirely insane. And so I want to talk about it a little bit. I want to go back to last year, and I want to look at some key days in Tesla stock last year. And then you guys can kind of take this information and pair it against any stock and then look at it and see how it did. So on last year in 2022, what we saw was in October, we saw Tesla get down to being oversold on the relative strength index. And basically the relative strength index will tell you which way a stock is trending. If the relative strength index is over 70 or stock, it means it's oversold. If the relative strength index is less than 30 or approaching 30, I'm sorry, it's overbought at 70, and then it's oversold when it hits a 30. So Tesla got down to 24.44, and the stock was considered oversold. And usually when a stock is considered oversold, that's the time you buy. So guess what? People started buying back in. But then what started to happen was, as these Twitter files came out and more information came out, that just created a downdraft in the stock like you wouldn't believe. Tesla got down so low. The stock was so oversold. It was twice as oversold as it normally would have been, barring this whole debacle. It got down to a 15.99. And that's when I had people calling me, wanting to throw in the towel on that stock. And my thing is this: you're wanting to throw in the towel on a stock because of information that you hear on TV. And my question is who do you think is paying for those people to say the stuff that they're saying? Well, I'm not going to get into that. But guess what? When Tesla got down to a 15.99 on relative strength index on December 27, 2022, I told people that was the bottom pretty much for the stock. Because what was happening behind the scenes was this: some of the largest institutional fund managers, while everybody out there was selling the stock, putting sell ratings on the stock, some of the smartest people in the world was buying the stocks by the gazillions of shares. And this is what makes me angry. This is what makes me frustrated. I told you guys my mission was to help the middle class. If you're in the middle class and you're selling your shares based on what you see and hear on TV, I want to tell you right now, you got to stop that. You can't do that, because while you were selling your shares, guess what happened? And I have software that proves this, because institutions have to report on their Form 13F, right? On the 13F, or it's something like that, right? They got to report on that, what they're buying, how much they bought, how much they sold. So let's talk about this. Last year, the Vanguard Group bought 144 million shares of Tesla stock. BlackRock bought 116 million shares of Tesla stock. Altogether, 916,878,455 shares of Tesla stock was bought. Shares sold, $3,607,851. So why these people, these talking heads on TV are telling you how bad Tesla is, some of the smartest people in the world were buying that stock up like hotcakes while you guys were selling it, right? This is insane, and this is what really gets my blood boiling. Now, if you're an investor, there are certain risks that you face, right? There's political risk, geopolitical risk, right? There's financial risk, there's interest rate risk, there's all these different monetary risk. There's all of these different kinds of risks that you have to face. And what you have to understand is, when you're looking at your stocks, how do they hold up? How does a company hold up in the face of all of this, right? So Tesla makes a lot of money in foreign countries. And guess what was happening at the time? We had a very strong dollar. And as the dollar is strong, it drives down the value of other currencies, right? So if you're selling your cars in China right? You're taking your monies in and, your revenues in China, and then you have to convert that to dollars. It weakens your profits, right? It does. And so as Elon was saying, look, this is an issue with the dollar strong. And then once it comes down, the stock will, things will turn around. And that's not only with Tesla stock, that's for any company, multinational global corporation that's buying and selling its goods in foreign countries. And so when you have a strong dollar, the exchange rate, right, it's different. So that's going to cause it to go down. But these people, some of the smartest people in the world, they knew what was going on. And so they stepped up to the plate and they started buying. And I want to tell you what happened just within the span of a few days, in the span of a week, well, when Tesla was oversold until now. So December 27th. Yeah, we're going to go with December 27, 2022. 208 million shares changed hands that day. A lot of buying, I believe, because when I look at the charts, it shows some buying. December 28th, 221 million shares changed hand. I think is buying, because the RSI got up the carpet. It got up off the carpet in a pretty good way. It went from 15 to 19 in a couple of days. December 29th, 221 million shares changed hands. December 30th, low trading day. Then we have January 2nd, low volume day. January 3rd, 231 million shares changed hands. The next biggest day was January 6th, 220 million shares changed hands. And on that day, Tesla stock went from being oversold to being the trend is positive and going in the right direction at a 31.09. As of today, it's at 40.9. So if you were in there buying when the stock was down that low, if you were adding to it, I think that was a pretty good move for you on your behalf. Now, like I said, you can look at this information I'm sharing with you and then just kind of pair that with any stock out there and look at the rhetoric that goes on, look at the buying and selling of the stock, and then understand, are they just trying to drive the price down so they can buy it on the cheap? And chances are that's exactly what they're doing, because all of these smart analysts are out there saying, sell, 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 getting on TV saying, sell, sell, sell. You guys didn't tell Vanguard that, because apparently they don't agree with what you're saying. And they went in and bought 100 and something million shares of the stock. So that's one of the things that I really want to encourage people to do is don't get into your emotions and start buying in and selling your stock based on emotions and how people make you feel about the stock on TV or what you read in your internet feed or your Twitter feed or your Apple News feed or your Bloomberg feed or your CNN money feed. You have to understand where we are, what's going on, and look at figuring out what you need to do to recover in your portfolio. That was Tesla. Then we had Apple. They got hit hard too. All of these tech companies got lumped into the same boat. Now, what's going to help change things around for 2023? Well, there's a couple of different things. I don't know when the war in Ukraine is going to get settled. Who knows when that's going to get settled? Maybe when we get new leadership in Washington, somebody who doesn't make money off of war and all these other crazy things that you got going on. Maybe when we get somebody in like that, maybe they can try to broker some kind of deal between Russia and Ukraine. I don't know when that's going to happen. Okay. Then we have government spending. Maybe they're going to rein some of that in, and just maybe the market will pick up on that and say, hey, okay, there's not as much liquidity that's going to be out there for all of these other things. And that should help the Fed decide to either pause or turn and cut rates, and we avoid a recession. Now, there's people predicting a recession. There's people not predicting a recession, predicting a bad recession, predicting a mild recession. It's the same thing. It's almost like you got these people in 10 different camps and they all can't get on the same page. Brilliant economists with PhDs, 200 of them or so, in the Fed, and still we can't come out with a consensus. So as the average consumer, the average investor, the person who's not trading on Wall Street, the person who's not running a hedge fund, we got to look at our 5, 10, 15-year time horizon and understand where we are in this point in time. I think we're somewhere around where we were in December of 2008. Not as bad, but stocks were taking on water and sinking like a rock. And the Fed at the same time was cutting rates. In December of 2008, they ended up cutting rates down to darn near zero. And that's when Apple stock took off. I don't think we have the same kind of conditions coming out of 2008, But if we get some kind of pause towards the middle of the year, or even some cuts at the end of the year, even though they said they're not going to cut, even if there's just a pause, companies will figure out how to deal with it. And we may trade flat over a period of time. And maybe there's a lot of volatility over that period of time. But guess what we can do? Over the last few weeks, I sat down, developed a different strategy to mix in with our intermediate and our long-term portfolios. And it is our target price-based option strategy, where I trade options in my client's portfolio now based on target price, current target price, median target price, future target price. And if I know some of the smartest people in the world are giving us these humongous target prices when the stocks are trading down near garbage range, guess what that means for me? I can go in and buy some pretty cheap options and watch them grow as the stocks recover, because time is on our side in a recovery. Now, had I did the same strategy coming out of 2020, we would probably all be super gazillionaires by now, just due to the fact that the rip was so big and so fast and so furious. I can't guarantee we'll be gazillionaires, but it's just a frame of reference that I want to put out there. When you know the market is going to recover someday, and you put these timers in there with your options, guess what? As the options begin to grow and they become profitable, you can rotate out of these options every single day if you want to. Take your profits and put them in something different. So for our clients who are needing income out of their portfolios, we use certain options in order to generate income on those portfolios. Now, past performance is no guarantee of future results. Everyone has to do their due diligence and understand their risk tolerance, because options are extremely risky. You could lose your entire value in the option. Because if the stock goes down and you paid $1,000 for your option, the stock goes down, the option could go down to zero, right? Or it could go up infinitely. But you're only lost in your option is the money that you pay for it. So if you paid $1,000 for the option and it's a call option, which is normally what we're buying right now is call options, then that option could expire worthless, or you could sell it at a loss, just like you can with a stock. However, if the stock goes up exponentially, the option is doing the same. And so we're looking at selling out of the options, generating profits, and then rotating that money. And that's what we're doing in our target price-based option strategy. Okay. And we can also do a range-based option strategy as well. And then there's different things out there that you can do, and we don't need a lot of money to do it. So we're probably putting less than 5% of our clients' portfolios in options as a way to hedge towards the upside. So if we do get a strong recovery in the market this year, guess what? We're positioned for that. If we don't get a strong recovery in the market, we're positioned for that. There's going to be, quite a bit of cash in some of the portfolios in order to exercise some of the options if we do that. And then the cash helps to hedge against the downside. So we're constantly rotating this money in and out in these long-term portfolios, and then sometimes in the income portfolios. And so if you want to take a look at that for yourself and you want to understand a little bit more about what the options-based strategy can do for you, click on my show notes, get on my calendar, and I'd love to sit down and have a conversation with you about that. But last year was crazy. This year may be crazy, but there's ways now we can take advantage of the volatility in the market and turn that into a win for you instead of a loss. And then we can feed off this information that we're hearing as well and play it in the positive way versus getting emotional about it and then, selling and just buying garbage stocks and rotating at the wrong time and all of these other different things. And so there's a big push and pull and a big tug of war. And as people in the middle class, we can't get caught up on all the rhetoric and all the crazy things we see on our TV screens, right? We got to sit down, we got a dream plan accomplished, figure out what it is that we want to do, put a solid game plan in place, and then we just have to simply execute it, put the blinders on, tell everybody else to shut up, take a back seat. We got this. We're going to do what we need to do in order to be successful. And so again, as my commitment to the middle class, if you are in the middle class, upper middle class, there's things we can definitely do for you to make sure you get from where you are to where you want to be, and to help you stop doing the things that you hate. And that is our goal and our mission. Now, in the next show, we're going to talk about, I have a guest most likely in the next show, but then the show after that, we're going to talk about how to avoid trying to live a rich man's life with poor man's thinking. All right. So thank you very much for tuning in. If you want to have a conversation, click on my show notes, get on my schedule. Let's see what we can do. So until next time, everybody, 1, 2, 3, let's get it.
This is thepodcastfactory.com.